Hi, everyone, and welcome to this week's Mish's Market Minute with Mish Schneider. Thank you once again to StockCharts TV for allowing me to spend this next 29 minutes or so with you to talk markets. Last week, I did a whole segment on the expectations for the second half, and I think I really laid out for you what had to happen with some of the sectors that were dragging things down, like the Russells and the retail and also the transportation, and then versus the mega caps and NASDAQ, which went ahead and made new all-time highs this week. And even though on Thursday we saw the initial gap lower, we've seen a lot of buying coming in on that initial gap lower, which is interesting because we still have the divide. It's such an interesting battle. The growth stocks are really helping things from falling apart completely in some of those weaker sectors. And of course, those weaker sectors did manage to find some footing, but you do have some damages and some opportunities, which is why I thought today, you've heard me talk about this a lot, we would look at a whole bunch of setups based on those 60+ day new lows or highs, and these are what we call reversal patterns. Now, what's interesting about the reversal patterns is that we have quite a few of them, and I'm not going to get into a lesson with you today, but I'll just say the words so that if you hear me say them, you'll understand. In the bullish reversals, we have what we call a brick wall bottom, and then we have what we call a glass bottom. A brick wall bottom, very simply, is a 2-day pattern that resolves on the third day if it actually turns out to be a reversal, and a glass bottom happens on one day. And so the same thing with reverse, with the bearish reversals, you have brick wall tops, 2-day patterns, and glass ceiling tops, which also are 1-day pattern. So I'm going to identify as much as I can as we go through these charts so that you can see what it is, but I divided it into two categories: the highs, so those that have made brick wall highs or glass ceiling highs. And of course, some of them, like you see, if you look over there, it says Boeing didn't work. I think it's important for you to see one that doesn't work. And the same thing with the lows, a whole bunch of symbols. These are all good as of Thursday as I'm doing the recording. They all obviously need some level of confirmation. And I'm going to give you one that didn't work from the past. So I shouldn't say they're all good as today. They're all in the more recent times. So let's go to the charts. And we're going to start with USO. So there's been a lot of talk about oil, as you know, and essentially with the USO chart. And I do sometimes find the difference between the charts that I pull up on my instruments versus this one. So this is actually more of like a 2-day pattern in that we made a new 60+ day high. And then ideally, this should really be an inside day, but the candle is inside. So we'll give it a little fudge since I pulled this up. It's not perfect. The perfect one we like to see is a new 60+ day high. And either it gaps the next day, which of course down, which makes it a glass ceiling, or it has an inside day the next day, and then the next day it reverses, which makes it a brick. So this is kind of a quasi brick wall in that we almost had an inside day, but what was most important is that the next day it broke the lows of these 2 days, confirming it as at least a temporary top. And so what we like to look at in these type of situations is, we're going to look at real motion, of course, because I think it's really important to take a look at the momentum indicators to see if they're matching. But nonetheless, what we like to look at is about a 10% correction, anywhere between a 5 and 10% correction when we see these type of opportunities. So if the high here was 51.40, and we were going to look for, let's say, a 10% correction, you just take 10% of 51.40. So let's call it 5 just for even sake, which would put you down at around 45. Now, sometimes it doesn't quite make it there, especially if you have a major moving average like you have here with the 50-day moving average. And of course, what you can see is happening as I'm talking to you after a couple of move down, and we got down to a low of about 48. So really, we sold off more like 6 or 7%. We're getting an inside day today, which could mean one of two things. Number one is you would go short on this day if you were interested in going short, or at the very least, if you were long, you would probably liquidate your long on this day as soon as we knew that it was going to close under this low of 50.31. So that's number one. So let's assume you're out and you're looking to re-enter, or you went short and you're looking to where to take a profit. Now that you have about 6 or 7% into the trade, or a little less since it's not from the high, let's call it 4 or 5%. This day I'm talking to you, getting an inside day, which means one of two things could happen. Either this inside day reconciles with it pretty much was a 5%, 6% move lower. That's it. The trend is still bullish. It takes out the high of this day of 50.15. End of shorts. Opportunity potentially to go long again. Although we like to wait for the actual high to be taken out, in this case, 51.40. Or this inside day capitulates to the more downside because it breaks the low of 48.22. And then it continues its move down. And if we're looking at about 45, we could even see the 50-day moving average get violated and go into a caution phase. Now, as we know, with caution phases, sometimes they go back into bullish phase, but they are definitely meant to do that, give you some level of caution. Now, if we take a look at the real motion indicators here, this also broke down under the 50-day moving average already, sitting right on the Bollinger Band. So what does that tell us? Is that if momentum precedes price, it's possible that this has more downside. And of course, we're not going to talk about the overall implication for the market, but you can guess that that's probably not a great thing, because it means that the demand is starting to decrease and the production is starting to increase. Now, with the diamonds, we're going to go back a little bit in time, because this is a classic glass ceiling. A one-day pattern. We made a new, in this case, all-time high, but it could have been a 60-plus day high. And then it gapped lower, leaving that gap, never filling that gap. And so again, if we're going to look for a 10% move, if the high was, let's call it 350 just to round off, and we were going to take $35 off, then we were looking for a move for around 325. We got to move down to 332, not quite there, before we bounced back. However, this is where the momentum helps you from getting fooled into thinking that's it, move over. Now Dow's going to go on to new all-time highs. Because if it breaks here under this 50, it's possible that we may see that move down to 325 still. The momentum indicators, first of all, already started to show you a negative divergence right away, as soon as we had that gap lower. And then throughout this whole rally that we experienced, it never got back over the 50-day moving average, even though the price did. And now here you can see that it really peaked out. And at this point now, even though it's under the 50, we're still seeing a declining momentum. So what does that tell you? If I had to make a guess, at the very least, I wouldn't be a buyer of the Dow. And if I were already short, let's say with my stop over this high, I would feel pretty confident that this could go lower. And if I'm not short and this breaks down under the 50 and confirms back into a caution phase like it did here, then I would assume that maybe at least the Dow is going lower. Now with IWM, since this price movement was all the way here in March, we've already passed 60 days. So we had a new 60-plus day high right here. This is also a classic glass ceiling. Made a new high of 233.41. Let me just make sure that's true. Yes, 233.41. The next day it closed under that, confirming the glass ceiling. And of course, again, if we're looking at about a 10% move lower, we're looking at about $23 down from here, or about 203. Wouldn't that be interesting? That would be somewhere right around the 200-day moving average. So this move down today, regardless of what happens, unless we really see some kind of a severe reversal, does mean that we still should be extremely cautious in the market, and of course, look at the momentum down here. Now, if we move over to semiconductors, this is happening actually rather recently over the last several days. It made a new high, and the next day confirmed with a glass ceiling because it closed lower than the day before. So your 10% move lower there is about $26. So figure somewhere around 236. Again, these are ugly projections, and they don't necessarily have to go all the way down there. They can be anywhere between a 5 and 10% move. But nonetheless, look at what's happening here with the momentum. Once again, breaking down under that 50-day moving average, and yet still holding the Bollinger Band right now. So that's kind of iffy. If we move on, ADI also not only had made a new 52-week high, but had a great glass ceiling top here. And now, as you can see, is moving lower along with the momentum. And again, I don't really need to necessarily do the math on every one, but you take the high of whatever it is that day. So figure 172.45, and you subtract 10% of that. So in that case, that would be about $18. Figure $17, $18, and then you can see that that would bring you down to about 155. We're not there yet. Okay, again, momentum is joining in. And now let's move on to another one, because what's so interesting is Applied Materials, a typical chip company, as semiconductors was trying to make new highs. This had a reversal back here, but again, this is more than 60 days ago. So we had yet another one here when we got up to 142.64 with a glass ceiling, closed lower from the day before's low. And now we're seeing the move down below the 50-day moving average with declining momentum. Those of you who like to go short, what I would do on something like this is I would wait for a confirmed phase change to caution, which means we'd want a second close under this 50-day moving average. And then you can simply risk to just over the high of the day it broke down from the 50. So it could be the high of today, 134.38, or whatever it turns out to be the next day. And then you might have yourself a defense short to see if this does indeed break down enough to get it down closer to either these lows or maybe even closer to the 200-day moving average. So you can see how you can use this to reverse an uptrend and go short. Of course, these are active, more active trades. Sit it out, get out if you were long, or in some cases, just sit in cash and wait, since if you're very, very friendly to this, it's to take out the recent high and get back in. Now, AMD is another one like that, which again, new 60+ day high. And this is a classic glass ceiling. However, this is why I wanted to show you that was active right now. This yesterday's low was 90.31. If it closes above 1931, then guess what? It's not a confirmed glass ceiling. It absolutely has to close below the low of the day before. So it has to close below 90.31. And then, of course, you can look at, say, maybe we're going to get a $10 move lower to about 85, which would put this, let's say, right above the 200-day moving average. If we take a look at another one that didn't work, let's take a look at Boeing. So in Boeing's case, here it did work, by the way, but where it didn't work was, where is it? No, I guess this, why did I write down this one didn't work? Forgive me, it did work. You got a 60-day, new 60+ day high here, and it confirmed the next day. So I don't know why I said it didn't work, but it did work. But I would like to find you an example where it didn't work, even on this chart potentially. Let's see if we can do that. Well, this one worked, and this one worked, and now this one worked. So maybe as I'm going along, we'll find something else. Forgive me for that. I obviously looked at it differently when I was looking at my charts. All right, so if we take a look at Beyond Meat, we had a classic slingshot or glass ceiling here that confirmed slightly here, but look at this, a tremendous move it down. In this case, it far exceeded the normal 10% move. It went down, it halved in price. And then on the flip side, it made a new 60+ day low, and it never really confirmed there either, which has always made me a little bit concerned, in that a new 60+ day low followed by an inside day, which gives it a brick wall, needs to have a close above the high of the day before, and it didn't here. That doesn't mean it can't go up. It did go up, but now we can see that BYND is coming back down again. And we had a new 60-plus day high with a confirmation the next day. So here we are back on track to make another move lower. So these reversal patterns are great. In the case of the real motion indicator here, obviously you can see what happened here. We went up in momentum, and then boom, we immediately started breaking down momentum before we broke down under the 50. Then we had this big move down, and the momentum started to reverse here and actually went to positive here just as this was starting to take out the 50-day moving average. And now it never really cleared the 200-day, and now we're going to look like we're going to be testing that 50-day again. So BYND in general has been super choppy. A couple of more examples to the reversal from the top. One would be Canadian Solar. And Canadian Solar, we're going to look at more recently, but this is a good example of one that didn't work, because here you can see we had a new 60-plus day high. The low that day was 59.57, yet the next day, and I can't really tell, but it looks like it closed above 59.57. So this was actually not a confirmed top. And you could see, though, it tried, it never got there, and it still had a big move lower. So let's go more to here. This is now much later. And we had a new high here, 60-plus day high. And then it came lower the next day, confirmed yet another glass ceiling. And now if we take the measurement from here, 48.35, and figure about $5 lower, 43, we've more than done the 10% move here. So what do we do when we've more than done the 10% move? When do we think it's safe to get back in? Well, clearly, we did have a reversal pattern here, by the way. You can see it had a new 60-plus day low and then closed above it the next day. And I'm going to give you a lot more examples of that. But at the same time, this is going to be key right here. It's holding the 50 as it tested the 50 today. If we start to see this momentum gain and this really hold the 50, then this might be a symbol that you would say made its correction, held a major moving average. It's time to look at it for a potential buy. And just another couple real quick. Estee Lauder, as bullish as I was, and I think I even showed you this, here's a classic new 60-plus day high, whammo, gap lower today. Unless we can rally here and close above the low of yesterday, this would be a confirmed. Of course, you can see what's happening here in momentum as well. And then the last one I wanted to show you is Facebook. As it started to skirt the investigations on antitrust, it made a new high a couple of days ago. An inside day, classic brick wall, gaps lower today. If it closes above the low of 350, then it didn't confirm. If it closes below, then it confirmed. And we could probably think that Facebook is going to go lower. Okay, so let's switch gears. Instead of tops, let's take a look here at some of the bottoms plays. So the first one I wanted to look at, obviously, since I'm so interested in materials, is AA. So this is Alcoa Corporation, and they deal with aluminum. All right, so the last time we had a low down here was back in March. So this is now past 60 days, and we made a new 60-plus day low here on June 18th. And the next day we had an inside day. So what is that? 2-day pattern? That's a brick wall bottom. And then the next day after that, we did close above. I would usually feel comfortable buying this with a stop right under here, unless I decided the momentum was so weak, why would I get involved? But by the time this happened, look what happened. The momentum was starting to pick up again, which told me it's not great momentum, but at least you would have had maybe a little trade. Let's say you got in at around 33, 34, and it got you up to 38, and you would have risked under 32. So a $2 risk to make $4 or $5, not so bad. Now, of course, you can see the opposite. Because the momentum never really gave you anything, never got through the Bollinger Band, the fact that it's back under this 50-day moving average doesn't surprise me. So the other factor that goes into these reversals is that you have to make a decision, and that's based on the overall macro, which I started by telling you the second half projection of the fact that we're looking at a limited amount of growth potentially means that the macro is still kind of dicey here. So you have to change your time frame to shorter and as opposed to saying, I'm going to buy Alcoa and I'm going to sit with it forever. Now, another one that came up is actually Aurora Cannabis. And again, this was a classic brick wall, new 60+ day low on a gap inside day the next day, and then breaks it out the next day after that. And if you look at the momentum indicators at that point, it was actually showing an interesting divergence positive, because this started to clear the 200 as this was now confirming that that bottom was in, and you had a nice move up from like 750 to almost 11. Okay, so that's exactly what I'm talking about as a classic trade. But as you move along in the trade, this is why it's so important to move your stops and have profit targets, etc. It still held the 50 here, and now it started to break down under the 50 and also break down in momentum, which means if you had any kind of tail left from when you bought it, you would have been getting out a few days ago. Another one to show you is BLNK. This is battery, and it's a charging station for electric cars. And once again, now, the reason why I'm showing you this is because I like when you see reversal patterns that break a major moving average and the next day they confirm getting back over the major moving average. Those are the ones that interest me the most. And so with a company like this, you could see it was a new 60+ day low. The next day it closed just above, or either more, even an inside day with confirming the next day. So at 30, you got your signal that maybe it was okay, it was going to hold the 200, and your risk could have been under 26. So let's call it $4. And of course, as we can see, this went up to $45. So you had a nice $15 move from your price entry, which is great. But again, if we take a look at the momentum on this, the momentum just started to blip over the 50 here, just as we were getting a new 60+ day high, an inside day, and then a breakdown the next day with a close under here. So here we are on the sell-off. So that's what I'm saying. This is giving you just another way to become a specialist. Say, let's say you only want to trade and you wait for these 60+ day reversals. You can day trade them, you can mini swing trade them, and unless they're really in the direction or the overall trend of the mega trend or the macro, I wouldn't necessarily say that you need to swing trade them, although there have been times throughout history that I've seen stocks like Chipotle, for example, have a reversal bottom at $340, which turned out to be the low of all time. The next one is Chewy. So here again, Chewy had, in this case, well, and see, in my chart, it looked like an inside day. And sometimes we do tend to have different charts with TradeStation and StockCharts. So let's just say this was an inside day, because that's the research I did. After a new 60+ day low, confirms this day. So let's say you got it at 70. Once again, you had a move up here to 89. That's not a bad move. If we take a look at what the momentum was doing, at that point, you can see here, it was already showing that it was starting to at least stabilize, clearing the Bollinger Band. By the time it got through the 50, you would have been also happily taking your profits at this point. And now, well, look what happened. We have a new 60+ day high, and we have a gap lower. So now we're seeing reversal to the other way. And of course, we would want to see what happens here with momentum, which actually, interestingly enough, is still holding up pretty tough. Disney's another one. We had a new 60-day low and it confirmed the next day, making it this a slingshot pattern. And so when I say slingshot, a one-day pattern. And here we have now another nice move up. But again, you have to go in the direction of the trend. Disney never broke the 50-day moving average, never really showed much in the way of momentum. What's interesting now is we may get a new low if it breaks down under here. But if it doesn't, sometimes what you can do in this situation is, let's say you had a new 60-day low and a good confirmation the next day. Obviously, you may or may not be still in this trade. I, of course, would have been out of this trade already when it couldn't get through the 50. But what I would be doing now would be watching to see what happens at 167.10. If this cannot break down under 167.10, it tells me that this is still in play, this reversal bottom. And what we would need is some kind of other sign to show us that Disney has indeed bottomed. And in that case, I would probably say I would at least wait for momentum to get back over that Bollinger Band. If we move on, one that's happening on the day I'm speaking to you, potentially, is eHealth. And I like eHealth. I look at it a lot. So eHealth looks like it has these reversal patterns all the time, but none of them have really confirmed. Today, though, it's only a one-day pattern. I would want to see some kind of confirmation. The reason why I'm very interested in this is look what's happening with the real motion. It's sitting on the 200-day moving average in real motion, while the price is above the 200. Below the 200. So what would that make me want to do potentially is make sure that we see Friday a move over 57.80, which is the high so far that the day I'm talking to you. And then you could put your stop very simply under 54.32 to see maybe we've caught a bottom in here. And again, what would encourage me more this time would be, of course, the idea that we held in the real motion a very important area. Okay, a couple more left. Now I want to show you one again. I don't know if the chart differences are going to be different than what my chart is, but let's look at Bitcoin did not work. Okay, this is what stopped me. I do a lot of interviews on Bitcoin and I tell people I'm flat, and this is the reason why. We had a new 60+ day low. The next day, the high here this day was 28.69. The next day, it did not close above that high. That tells me it didn't confirm. At the same time, the momentum was but that really wasn't the factor. For me, it was this. So now look what's happening. We've been all over the map in Bitcoin, but you can see right now that we're heading down. If we take out, which would be ugly, but if it takes out 24 here, then I wouldn't be surprised, number one. And number two is then I would be looking for another type of reversal pattern because I'm still very long-term bullish in Bitcoin, although it does look like we're heading toward a death course here. But nonetheless, if it reverses the next time and confirms, it might make me a little bolder. Okay, a couple of more to look at. Gilead. And again, I'm not saying go ahead and buy these things or sell these things. This I'm really just showing you as a lesson of how it works. So here is, actually we have to go, well, there's been quite a few of these, but here's the big daddy one. Made a new low. Next day had a huge reversal, followed through the next day and cleared not only the 50 in real motion, but it cleared the 50 on the phase change through the 50-day moving average. And that slope was good. So this was a situation where buying, let's say Gilead at 58, you had a nice opportunity. It went all the way up to 68. So you made $10 on the trade, and all you would have really risked would have been to under this low at 55. So that's not a bad do. $3 to make $10. I'll take that all day long for more active trading. But now you had another 60-day low. No, that wasn't a 60-day low here. But from here, we actually have not had a new 60-day low. So again, this is actually still in play in Gilead, and yet, and you could see the momentum is here, but it's sort of coming off. Is this a new 60+ day high? This is 69.45. This is, no, yeah. So we also had another reversal top here with a new 60-day plus high. So now we have to see what happens here, whether or not this makes a 5 to 10% move lower. Okay, a couple more. IBM. IBM had a really nice inside day here, and then boom, took off. Turned out to be the low of the whole move. So as I showed you with Chipotle, here's another one. So that's something else to be very aware of. And a couple more just to show you real quick. Gogo is one to keep an eye on. Gogo looks like right here, it made a new 60+ day low. Actually, it did here and confirmed. Then it never made that low back, and now it's making a higher low. So this would be something else to be looking at to see if momentum improves. And finally, we've got DDD. And DDD was a classic new 60+ day low, gap the next day. At the same time, momentum was improving. By the time the momentum cleared the 50-day moving average, you would have already been in this. And now let's see, do we have an actually new 60-day high? We had a new high here of 41.45. No, it was a 41.48 here. This was not This was an inside day, but it never closed below that low. So we're just getting a correction and not necessarily a reversal. So you want to keep your eye on momentum. So I hope that was very helpful to you in the education here of how we look at charts and use real motion to help us. You all have a great weekend, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.